From the floor of the CME Group, this is Danny Riley on today's Cash Close. You know what? They racked the S&P up yesterday, then they racked the S&P down today, and they did a number on the downside in the S&P all day long. After the big sell-off early this morning, we had a big rally, and then a big flunk and dunk late in the day, and the S&P never recovered. It's been all to the sell side. The high of the day in the S&P came in at 1639 even midday. The low came in at 1621.70 early in the day, and last were 1625 even. We're down 17 handles. The S&P just refused to rally, and especially right after the MrTopStep and closing imbalance meter, as soon as it turned on at 2 o'clock, it was 81% to the sell side, and the S&P has never recovered. They were trading 1533, and they dropped straight down to 1524. Never had a chance. Total volume, we've got 2.6 million minis, we've got 10,000 big S&Ps, but 7,000 of that is coming from the S&P spread. So we've got a total of 3,000 big S&Ps traded in the pit. MOC, we had a whopping 1.3 billion for sale in the SPX, and MOC in the broader market, we had 650 million to sell. Didn't like that at all. Tomorrow we have the MBA Purchase Apps, we have the API, we have a 10-year note auction, and look, there's a lot of churning going on here in the S&P. If you like the market, you think it's going to go higher, we're going to have to see the S&P get back above 1650, and right now we're getting a bunch of lower highs, which is never interpreted very well. And then going into Thursday and Friday, we have 11 different economic releases, and we have the 30-year bond auction, and we think that the S&P is going to continue to be erratic right into the end of the week. As we're going out right now, we're 1626 half. That's down 1560, but I'll tell you what, the overall price action here in the S&P has been lacking all day. We'll see it tomorrow in the opening print.